All right, today we're diving into a story about a semiconductor company that is making some huge waves in the AI revolution. And you know what? It might just be the most important chip designer you're not talking about yet.
So, picture this. 14%. That was the instant after-hours stock jump for a company called Marvell Technology. A 14% surge. I mean, that's massive. It basically screams that Wall Street was very, very impressed.
And what caused all that excitement? Well, it was a blockbuster quarterly earnings report. Now, the market was obviously reacting to great sales numbers and an even better outlook. But if you dig just a little deeper, you realize those numbers are really just the tip of the iceberg. They're pointing to a much, much bigger trend. So what if the real story here isn't just about the numbers? What if the next big phase of the AI boom isn't just about cranking out more powerful, all-purpose chips, but about making smarter, more specialized ones? That's the real question, and it's right at the heart of Marvell's incredible performance. Okay, let's get into it. We'll start with those headline results that really got everyone's attention. So, here's the report card. The company posted revenue of $2.22 billion, just nudging past what the analysts expected. Same deal with earnings per share, a tiny beat. But look at that last line. That's the one that matters. Their guidance for the next quarter. They're projecting $2.4 billion, which absolutely smashed the $2.28 billion Wall Street was looking for. See, the key takeaway here isn't just what they did, it's about the roaring confidence they have about what's coming next. And the CEO, Matt Murphy, he tells us exactly where that confidence is coming from. He's not being coy about it at all. He's basically pointing a giant flashing arrow at one thing, the data center. And these days, data center is pretty much code for cloud computing, and more for the AI infrastructure that's powering our world. And that brings us right to the core of this whole thing. We've seen the what, the impressive financials. Now, let's unpack the why, the actual technology that has the world's biggest companies lining up at Marvell's door. Right, to really get this boom, we have to peek inside the modern AI data center. It's a fascinating place where different computing architectures are competing, and there's a major shift happening right now. Okay, think about it like this. A general-purpose GPU, the kind of chip that has made Nvidia a household name, it's like a really high-end, off-the-rack suit. It's incredibly powerful, it's super versatile. But a custom chip, what's called an ASIC, that's a custom-tailored suit. It's designed to do one specific thing with just breathtaking efficiency. We're talking less power, faster speeds, all for that one single job. So, who wants these custom-tailored suits? Well, only the biggest names in tech. You've got Amazon, Google, Microsoft. They're all pouring billions into developing their own custom silicon. Why? Because they're looking for any performance edge they can get. They want to lower their massive power costs, and they want more control over their own technology as their AI needs get more and more specialized. And guess who they're turning to for help designing them? Companies like Marvell. And hey, the data totally backs this up. This research from TrendForce shows a really clear trend. The market share for these custom ASICs in AI servers is projected to jump to almost 28%. That's a huge bite out of the GPU market. This right here, this is the wave Marvell is riding. Now, it'd be easy to look at all this and think Marvell is just some overnight AI sensation, but that's really not the whole picture. This recent success, it's built on a really solid foundation. Check this out, 22.5%. Over the last 5 years, that's been Marvell's compounded annual sales growth rate. To put that into perspective, that is an exceptional number that consistently beats the rest of the semiconductor industry. It shows a long-term pattern of success, even before all the current AI hype. So what this tells us is that Marvell isn't just a one-quarter wonder. They've been executing really well for a long time. Their pivot to focus on data centers and networking, that wasn't some sudden bet on AI. It was a strategic shift that is now paying off in a huge way. That history of growth just gives their current story even more credibility, But is it all good news? Of course, in any market this hot, you have to look at the whole picture. Even in a report this stellar, sharp-eyed analysts are always looking for potential clouds on the horizon. And that brings us to a potential warning light: inventory. In the world of semiconductors, this is a metric that everyone watches like a hawk. Yeah, the metric is called Days Inventory Outstanding, or DIO for short. In simple terms, it just tells you how many days' worth of product a company has sitting on its shelves. A low number is awesome. It means stuff is just flying out the door. A rising number, though, can be a bit of a red flag. It could signal that demand is slowing down.
And here's the deal with Marvell. Their inventory days jumped from 92 in the last quarter all the way up to 118 in this one. That's also way above their 5-year average of 106 days. So what that means is they're basically holding on to more unsold chips than they usually do.
Now, look, this doesn't automatically mean disaster. But in a famously cyclical industry like semiconductors, it's definitely a data point that investors are going to be watching very carefully over the next few quarters. It's just a little note of caution in an otherwise fantastic story. So, with that one little warning light flashing, what does the future hold? How did the company and the market weigh that risk against the absolutely massive opportunity? Well, this number right here is what answered that question. $2.4 billion. That blockbuster revenue forecast for the next quarter. I mean, this single data point was so strong, so full of confidence, that for most investors, it just completely overshadowed any concerns about inventory. It was a clear signal for management saying, don't worry, the demand we see coming is more than enough to handle what we've got.
And the long-term opportunity here is it's simply massive. The entire market for these custom AI chips is projected to explode, reaching something like $94 billion by 2028. That is the prize that Marvell and its competitors are all chasing.
All right, so let's quickly sum up the bull case here. Marvell is perfectly positioned in what might be the fastest growing part of the AI chip market. It's winning business with the biggest customers on the planet, and from a valuation standpoint, it's trading at just 10 times its price to sales ratio. Now, that's just a way of comparing its stock price to its revenues, but to give you some context, that is less than half of Nvidia's multiple of 24. It's exactly why some analysts see a potential 50% upside for the stock over the next year.
And all of this brings us back to our big question. The story of Marvell Technology, it isn't just about one company having a great quarter. No, it's really a preview of a potential shift in how we build the very engines of artificial intelligence. As AI tasks get more and more specific, it seems like the demand for specialized, custom-tailored solutions is only going to grow. So the real question is, just how much of our future will be custom-built?